I saw Laser Floyd at the tiny casino in Syracuse, New York, inside of their performance center, which seated like 200 people. Not a music festival, not a Burning Man or Coachella type scene.
And it was exciting.
I thoroughly enjoyed it. It was great.
You seem to be into astrology a little bit.
I'm not an astrology guy, and I take some offense to that.
No. Well, the reason I'm not into it, I do identify with Libra. It's the end of September, so I'm thinking Libra, balance, debits and credits.
Okay.
End of quarter. These
Here
are
we are.
exciting things.
These are all exciting things.
And here we are. Yeah.
The podcast is exciting as well.
The end of quarter. But yeah, I was always wondering, like, when do they actually start the podcast? Or do they just start bantering and then it just flows right into it? Because you always pick up on podcasts somewhere right in the middle. So it's just like, you're like, oh, they've been talking already. And now all of a sudden I just started listening in.
And that's what we've been doing here. And exciting though, end of quarter. What a day. This is one of my favorite days they got 4 favorite days of the year, which are the last day of each of the quarters.
Is it more exciting or is it more stressful? I mean, that's kind of like a tax filing deadline that people are like really pumped about it and they're also like really freaking out at the same time.
Depends on if you're going to hit the number or not. It all depends. But regardless, there's always a flurry of stuff that gets closed in the last week of the quarter. And then the last day is nuts. And to see how much, you reminisce, it's like, wow, we're going to close more today than we closed in the first 2.5 years of selling FloQast.
Yeah. Which
is like, you see that kind of stuff. And so it's always exciting no matter what. Obviously it's more exciting if you're hitting the number,
sure.
A little more stressful if you're missing it, but it's a lot of fun.
That's a cool journey. Yeah. Speaking of journeys, we got in the accounting world, pipeline and employment stuff. We're back to school. Now the focus of accounting is sort of like back to the office and it's sort of back to the profession. And what are we doing? As the students come back, it seems like this profession is also thinking about, oh shoot, the students, right? Like that's the future of accountants.
Right.
Do we have future accountants coming to fill these roles?
This has been a hot topic for sure.
So with that being said, episode 16 of the FinTech Flo. What's going on, everybody? Welcome to the FinTech Flo. I am your co-host, Drew Carrick, the rapping CPA.
Nice. I'm Mike Whitmire, co-founder, CEO of FloQast, and inactive CPA.
Are you still inactive?
I have a check in the mail where I'm corresponding with the California Society of CPAs, and we're working through that. So that's about to be deposited, and I'll be back.
The active inactive. Well, you're gonna have to consider how you want to brand yourself on the podcast for the next until you.
I know. I want to ask them, like, can I go inactive again or intentionally? But we'll see. Maybe I'll be active for a stretch of time. Or I think you're allowed to. You can lie down. I don't know about up. Well, I definitely know about up. You can't do that.
Can't do that.
Oh yeah, maybe I can undersell myself a little bit.
That's pretty funny. Mm-hmm. So first article we got here, straight into the Wall Street Journal. Audit firms face stiffer mandates to verify client details under the new rule. The Public Company Accounting Oversight Board approved a new rule aimed at curbing fraud despite concerns from internal auditors over its depiction of their role in confirming financial information. Internal auditors don't get spoken about a lot.
They do not, yeah. And it's really like, do you want to explain what an internal audit person does? So kick into it?
The really cool thing is when you look at an org chart of a company, the internal auditor reports directly to the board. And they're supposed to be, it's weird because they work for the company, but they're also independent somewhat of the company. And they're kind of like pre-auditing to make sure when the audit comes, everything's in good shape for them. And then also, this is where I think this rule sort of comes from, is how involved are they in the actual auditing process? Because they can be used as a resource by the external auditors who come in to do some of the procedures. And that's always just an interesting thing because you're just relying on somebody at the company, but they're not at the company.
So good summary. And I would say internal audit's like the first line of defense for avoiding a significant deficiency, material weakness, or restatement, things like that. What I did notice in my time when I audited a company who had internal auditors is, they didn't go to the level of detail needed to like truly avoid issues coming up. There was a very much believing, oh, sure, here's the schedule of transactions. Yep, I'm just going to assume all these transactions are correct and make sure it ties out, and good job following process. And it felt more control and process related than going into and doing substantive audits from there. So I was also always a little struck with like, how much value is really being provided? And then I can certainly tell you, I found inaccuracies on the back end.
Not a lot.
Yeah. I mean, there's some value to it. And what I like about it is you do have, so they're internal and they're, supposed to be independent, but they work at the company. And so they're trying to do what's best for the business. So it is like a first line of defense. And if they find a challenge, they're not going to ding you with a material weakness. They're just going to be like, hey, we found this problem. We need to remediate it before the outside auditors catch it. And it's a good like first stop, and they're a little more collaborative than independent. They toe the line, I think, pretty well.
It kind of comes down to how much the board or the leadership values fixing problems within the company, which you hope they care a lot about.
Yeah.
I'm the first, I'm in a way, I'm like an operational internal auditor. Like I always am, if I see something, I'm like, oh, here's an operational deficiency, we can improve that, or here's a potential risk, and you kind of bring it up to say something about it. And depending on the business you're at or the company you're at, they either take it and they're like, yeah, okay, whatever, we don't care, or they actually do something to sort of address it. And I think if you have like an accounting or financial minded leader of a company, they're a lot more in tune with why it's important to have those things brought up and then addressed. Mm-hmm. And I think internal auditor, if they actually care about what they're doing and they're not just milking it in because they're like, oh, well, I know the board doesn't care if I say this, so I'll just tell them like, yeah, it's all good, everything looks good, and then you hope that the external auditors don't catch it. Yeah, my mom's an internal auditor for a couple different school districts. It's like a part-time job. She just goes in and pops it. She genuinely cares about what she's doing, and so she's taking it to the smallest details and bringing it up when she sees something. Okay. As long as you get people like that, I think it is providing value. But like you said, you have to report to a manager, you have to report to a partner, senior manager, you have to report to a partner, quality control reviewer when you're an external auditor. If your boss as the internal auditor doesn't really care that much or focus much on your role and your job, then you kind of can milk it in, I think.
Yeah, it's interesting. It's a little less stressful in that regard. But it's nice that it's taken seriously at the board level because you have the audit committee on the board, and while they're responsible for the independent audit, they're obviously going to have some thoughts and input on what the internal auditors are doing and what their scope is to help make the independent audit easier. So yeah, there is good board oversight into that regardless, just simply because of the audit committee. I think it all depends. And what I find interesting also is companies will hire firms to be internal auditors. So I think it's just you're hiring the firm with a bit of a different understanding of, that firm is not going to give you a material weakness if they find something. So it's a different, like, hey, professional EY, can you internal audit us so that when Deloitte comes out, we're going to feel better about that audit. I always found that weird. I only worked in a dynamic where the internal auditors were full-time employees of the company, but you have that as well.
I was an internal auditor so when I moved into advisory, what's interesting is internal audit is considered an advisory service. Mm-hmm. So it falls under that service line, but that's like a major service line, especially for compliance purposes at a lot of these advisory firms. They don't actually do audits because they're either not authorized or they're not run by CPAs, but they offer internal audit services, which falls under advisory, which is interesting, but they would be.
I think it goes down to you're not signing an audit opinion. Right. That's it.
And when I worked at Long Island University, before I worked there, I was an internal auditor working for Grant Thornton. And there was also an internal auditor who worked at the entity. So there was one internal auditor on staff. And then there was the advisory firm, which was Grant Thornton, to provide internal audit services on a quarter basis or something like that. And then there was KPMG who actually performed the audit.
Jeez, well, it's kind of nice to hear that there's university money was being safeguarded.
Yeah, that's just good. But so the interesting thing about this mandate is actually in relation to confirmations. The rule is a move to further prevent fraud, concerns a process called confirmation, which is part of almost every audit. I mean, that's the most basic. Whenever I explain auditing to people, I was like, well, you have cash. You tell me how much cash you have. How do I verify that that's actually how much cash you have? Yeah. Well, what I do is I go and I ask the bank, hey, how much cash do they have? And then the bank tells me how much cash they have. Yeah. Oh, okay. That's what auditing is.
It's funny explaining audit. Like that's my quickest way is I go out to a client and say, prove it. Prove it. Yeah. That's it. And there are different ways to prove different things, but yeah, this is like 101. So go
This is really interesting. At present, audit firms are required to request that a third party, such as clients, lenders, or customers, confirm the accuracy of information. That we obviously accounts receivables is correct. And audit firms are permitted to assume that the lack of a response is a corroboration of accuracy. So if you don't say anything, I'm taking it as it's all good.
What?
Which is wild. So under the new rule, audit firms will have to receive confirmation, usually electronically, that states the amount of cash and cash equivalents held by third parties. Accounts receivables are accurate. and it marks the first major update to confirmation requirements since the PCAOB adopted them in 2003.
Wow. I didn't realize it started only in 2003. That's interesting because when I started working in 2006, yeah, it was all manual. And then I remember confirmation.com came on the scene. So presumably they're going to do better with more confirmations having to actually be confirmed. I don't know how they price, but I
don't know how much it is anymore, but it was $125 per confirmation.
And is that whether they confirmed or not, or was it only charged? Do you know if it was only charged on completed confirmation?
It was charged to send out. It's like
to
postage.
Send out?
It was postage. I mean, granted, the beautiful thing that confirmation.com did is they linked up with all these major banks and they said, how annoying is it that you have this big PO box that's just getting filled with confirmations all the time? We're going to make it easy.
Yeah.
You sign up to register on confirmation.com. We're going to get all of the audit firms to use confirmation.com, and you just have one person who's hired and their job is to just collect these things and push them back out.
Do you know that was their go-to-market strategy? Was going to the banks directly?
I made that guess back in 2017 when I was issuing that. I'm like, wow, this is a brilliant business idea.
That really is, yeah, because you kind of only have to sell to like 5 companies to own the whole space. You get all the major banks, and then you get the 4 audit firms, and then go second tier, and then add more banks over time. And yeah, you can like very quickly get to critical mass. And
this is the entrepreneurial layup dream, because it was somebody who was probably sitting there as an associate. That's the job of the interns and associates, was to just envelope and package 50 of these confirmations and mail them out. And they're like, there's got to be an easier way. And then all of a sudden it clicked. I'm just going to make a website. As long as I can make a couple connections, get in with these banks and sell them on the value prop of how it'll save them a bunch of time fielding all of this paper. It'll help the environment. You could throw that in there.
Oh, it's such a clear value prop. I mean, like, dude, I sent out paper confirmations. Wow. Okay. They should absolutely be doing this. This seems like something where, and then I guess what I was referring to earlier was it even felt like for just internal transactions, you're auditing fixed assets. Here's a computer we bought. Can you give me the invoice? It's like they were just like, okay, yeah, there's a laptop on there, and just sort of moved on with their lives. So this is definitely a good starting point. I wonder how deep the rabbit hole is here in terms of evidence, like how much evidence you need to be gathering.
And you talk about the independence of the internal auditors. That's the other half of this is audit firms will now be explicitly barred from using a company's internal auditors to help select items for confirmation, which is kind of it. I mean, again, it's how much do you trust the internal auditor? That's a decision that just needs to be made from the top. But the fact that an internal auditor could just say, oh, well, why don't you pick that one and I'll pick them for you. That's like letting management pick selections. You're like, well, I know these 5 are good.
This feels so very obvious and like the correct way to do it.
But what I just thought was fascinating about this is fast food giant Wendy's echoed a concern to the letter of the PCAOB, saying it was troubled by the regulator's assertions around the internal audit profession, and it will compromise confidence in what internal auditors do. And I was like, wow, Wendy's got involved here. And we forget often that like a fast food chain like Wendy's has an accounting department.
Yeah,
every industry has an accounting department.
They definitely do. I love it. And that's part of why I love it so much.
So,
yeah, that's. I mean, obviously they would push back on it, but I think PCAOB, good job. These both feel very, very reasonable and very necessary.
2003, I think 20 years is a good time to refresh. Thomas Jefferson, I think, had suggested at one point that the Constitution get refreshed every 20 years.
That seems. I'll start with politicians, and then we'll go from there.
Speaking of politics, from Accounting Today, AICPA backs STEM accounting bill in Congress. Now, I heard of STEM before, but I'd never really heard of it in the context of accounting.
Yeah.
And STEM recognition for accounting at the K-12 level could enable federal funding to be directed toward accounting awareness and education, while affirming the accounting profession is relying more on technology and exposing diverse students to potential accounting careers.
This is awesome. This is great. Man, the acronyms in accounting are having a good week. PCAOB and the AICPA. I love this. This is so necessary. We've talked about it on here. The podcast is called the FinTech Flo. Mm-hmm. We're going in the area of technology. We know that people, the kind of brains that do well in accounting, do well in STEM. It crosses over really well. And so combining these things and having more of a technology-focused approach on accounting makes all the sense in the world. And then, we talk about elevating accounting and we talk about the concerns in the profession. Getting this on people's radars in high school is, to me, a no-brainer. And I'm great. It's like even better to see it combined with technology. It's so cool. That's so cool. Wow. Like exceeding my expectations. Well done.
I mean, I think it's one of those things, and we've spoken about this before, of why when we don't have accountants highlighted in the media, you have to have some way to get it into the youth, because that's really where you originate your ideas of what you want to be when you grow up.
Yep.
When you ask a little kid, what they've seen the most of is baseball players on TV. I want to be a baseball player.
Now it's YouTubers.
They've seen YouTubers. So now I want to be a YouTuber. I want to be an influencer. As they get older, you have shows about lawyers and police. I want to be a cop. I want to be a lawyer. I want to be a doctor. This, you have to get in early to at least just put it in the brain. You don't have to sell anybody on going into accounting, but they have to know it exists and it's a possibility. And by the time you get into college, it feels like it's a last resort, as opposed to, oh, this is actually something I know about.
Yeah. If you have the right people who get it, it's like you have kids who are entrepreneurial in middle school and high school, and learning something about accounting is going to spark interest in that because they're entrepreneurial and numbers matter and everything. I could see this being really good. Who knows how long it's going to take to actually play out and come to fruition, but it's great. I'm surprised that Nikki Haley wasn't on here supporting this. Fun fact, Nikki Haley has a background in accounting. I love it. So
maybe she was on the committee?
I don't know who I'm going to vote for, but it was very cool. I saw she had a background in accounting. She was talking about balancing the budget. I was like, oh, that's healthy for at least somebody to be talking about balancing the budget here. And I think her line was like, so we need an accountant in the White House. And I was like, I can get on board with that. Yeah.
That's a platform to run on.
Yeah, that's a great platform. It crosses party lines. We got everyone, both sides of the political spectrum in the accounting world. So that would 100%. Be cool.
Yeah. I think the big focus here on combining accounting with technology is huge, because everybody wants to get into tech now. If you're an adult, like I would tell a kid, start working on your coding and developing. Even if you don't pursue that lane, having knowledge of technology, it's as valuable now as like being able to fix a car. That's the modern day equivalent of being technically savvy mechanically, is being technically savvy with computers and electronics.
Well, literally being able to fix a car in 10 years is probably just going to be a computer, fixing a computer. So Tesla already, you
plug it in and it just I see what's wrong. Let me go fix that.
Yep.
So really cool, but exciting news for the accounting profession. And we love to see that. So we've got from the Wall Street Journal, this is interesting, of talking about pipeline things and the workforce, how a 4-day work week actually works from the companies pulling it off. Fewer meetings, busier days, and other ways to fit a week's work.
You can put me on blast about this right now?
I have no idea what your opinion
Mike, what do you think about the 4-day work week?
I think it really matters what industry and what profession you're in. And I think I also am not a fan. I don't know if I'd be a fan. I don't have an opinion really hardcore on this, because I think it varies. I think people have different hours that they're better at working than others. I was a fan of like the off hour work day. Maybe I work better 4 hours early and 4 hours late. Maybe that's my 8 hours. I might be a night owl. Maybe I'm most productive 12 to 8. Then I want to sleep from 8 in the morning until 3 in the afternoon, and then go do something in the afternoon. If that works for you, and it works for you, and you kind of figure it out. So I think flexibility is sort of key here. Would I prefer maybe a Monday, Tuesday, Thursday, Friday? Maybe you have Wednesday off in the middle as like a break day, but do you lose your flow state then, and you have to kind of get into it? So maybe
you definitely do, because no one's going to work on Friday anyway. So you would really be working 3 days a week. That to me, okay. So first of all, when you think about this, you have to consider the form of compensation. Are you making an hourly wage or a salary? So in this case, we're talking about the UAW, right? United Auto Workers. As part of this, within the contract talks, they wanted to reduce it to a 4-day work week for a higher hourly rate. So I think that's a little different. It's just like they're asking for more of a pay raise and to work later. And I believe the implication is with a lower mandate, you probably qualify for benefits with fewer hours or something to that effect. You'll have to excuse me, I don't know all the nuances of it. So I could see that making sense. Then you move into a salary world, and by working 20% less, it's a 20% raise.
Right.
You think about it that way. So if the expectation is, hey, I used to be expected to work 40 hours a week, I think we most know that in salaried roles, it's particularly at high growth companies or in the profession, you're not actually working 40 hours a week. You're working more than that. So I get that people want, I think what people really say when they want a 4-day work week is they want to get Friday off. Yeah. And then there's more flexibility the rest of the week. So that's where I kind of chime in. It's like, if people would actually commit to putting in the appropriate amount of hours and take a Friday off, I'd be okay with it. If it's simply, I want to work 8 hours a day for 4 days a week instead, that's just a nuanced way of asking for a 20% raise. And that certainly doesn't benefit the company that you're working for. It is a much bigger ask than I think people realize. But all that said, I think the real thing that people want is flexibility around when they can work their schedules. And from my perspective, as long as you're putting in the hours, like, I'm fine with that. And I'd have no issue if someone wanted to work 10-hour days for 4 days a week to get that. That's fine with me. And I actually think about back to my audit days, and that was kind of how we informally ran it, right? You go through busy season, you're grinding, you're billing 60, 80 hours a week, whatever it ends up being. Then after it's done, you kind of have your like informal crash week where maybe the team's only working 3 days that week or something, and you're leaving early, and you just kind of like balance load your schedule on your own to try to make things work. I think it's kind of a similar approach here. When you get to, so hourly versus salary is a very different mentality here. And I'm obviously, as an employer, I would like to get the most productivity.
I think having the hours baked in, like, you know that there's going to be some burnt time over the course of a given hour, right? So the 8 hours exists because maybe you do understand that like 6 of those is going to be productive. And I think some people might be taking the approach that it's like, okay, well, if 2 hours is unproductive anyway, I'll just really, really focus in during those 6 hours. But I don't know if people are capable of, really, you can't lock yourself in and just have 6 straight hours of productivity.
No, it's too much. It's exhausting. Yeah.
So you have to kind of build in the fact that you need a little bit of space in between. They have that, there's a productivity hack where it's like do 50 minutes of work and then do 10 minutes of something, and then you go back in and it keeps resetting you, and then you're motivated, and that way at the end of the day you've actually accomplished more. And I think it also matters for each person. What's interesting is something that's like United Auto Workers, is that more assembly line based, where is it possible to actually create more output? If you're expected to complete 20 cars in a day, are you capable of doing 25, and then it makes up the difference? It's the same thing. I mean,
that's why the like, are you hourly versus salaried is such a big distinction with all of this. And then on the salaried side, it's all going to come down to the person. It's almost like the 4-day work week versus the 5-day work week doesn't matter, because you want to, at the end of the day, back it all into the number of hours. And someone who's ambitious and works hard and cares about the company doing big things and wants to move their career forward, they're going to work the same number of hours, regardless of whether there's Friday off or not. Like we do mental health days at FloQast. I generally work on those because it's like what's best for my mental health, right? It's because I get a day to like focus on stuff. But yeah, and then you'll have, you have the people who do just enough to get by. And what's going to happen is it's going to start with like, oh, we'll work 40 hours over 4 days. And then now it's going to devolve into an 8-hour day. And then you're going to kind of have Thursdays are going to be the new Friday, and it's going to be a half day, and it's going to just, it's human nature. It's how it goes. And so got to break out the compensation type and then break out the actual people that are employed at your company. And with the go-getters, that's not going to matter. And with the poor performers, just do enough to get by, it's going to really get bad.
So that's why I'm a fan of project-based, especially, I mean, when it comes to accounting firms or audit firms, right, or advisory firms, you're getting paid to provide a certain service, and it doesn't really matter how long, as long as it's within margin.
Yeah.
Jason Statz actually just put out a little video about this, how he kind of got 80% of his clients at one point when he was at his firm onto just this is how much it's going to be. It's $1,500 for this service, and as long as it comes in within range, then you kind of just stick with that.
Yeah.
So it incentivizes you to get it done quicker, and as long as you have the output there. When it comes to billable hours, it's always like a big question of how much of the hours is getting milked, what's being utilized, what's the actual realization here.
I love project-based as well, so just doubling down on that. And the other one is you have the predictability of pricing. Right. You're not, when I'm working with our lawyer, I'm on their lawyers bill in 6-minute increments. So I really care about getting to that 7th minute or not. So my phone calls are quick with our lawyer. And then, you're always wondering like, really, it took you 2 hours to put that memo together? Seems like, so you just take it makes the relationship much better if it's a flat fee, as long as you're pricing to the value of what they're achieving. I feel like you're good to go. So I think that's becoming a lot more popular, moving to the fixed base fee, which is very cool. I like it.
Value-based pricing, we love it. So here's some things that I'm wondering how you've read it talking about value and how someone values their stuff. And I hadn't even...
Speaking of compensation.
I hadn't even thought about the compensation side of this, but we'll get into that on the next slide. This is from the accounting subreddit. The original poster, throwaway Cubs. I am leaving the firm soon, who treats me so well. They have no idea, and I feel like a traitor. Now, the rest of this goes on to say, I've been staying in this firm for 7 years, and partners treat me so well, and I would say work-life balance outside of tax season is pretty good, which is awesome to hear. I have about 11 years of public accounting experience now, 7 of them with this firm, and the reason I wanted to leave is I just feel like I'm not growing professionally. I feel too comfortable at my job. I want career growth. Just sort of stop there. Okay, that's fair. I don't see myself being a partner. I think that's the biggest key. If you're not going to plan to make partner, then what are you doing?
Yeah.
I think I should leave public accounting altogether and move into industry. I'm being interviewed by a few places, and the pay is pretty good, 100K base. I'm currently making 82. LCOL in California. I don't know what LCOL stands for.
Local cost of living?
Okay.
That's a broad statement. Where in California?
Somebody else had commented something.
Are we
about
in Santa Monica or
yeah,
or out in the desert?
I feel like a trader. I go to work and see these partners every day having friendly conversations. They have no idea I'm leaving. How do I bring this up? How do I even start? Can't mention until I have a solid offer accepted, but I want to give them notice. Sometimes I wish they weren't so good to me, so it's easier to leave. That's like the cheap way out. It's a self-sabotage way. Like real people do that in relationships all the time, is you just like let it deteriorate to the point where it's like the other person's decision, or it's like very obvious and they're like, no, you did something bad. Now I have a good reason. It's like, I don't really have a good reason. I'm going to. So the first thing that came to me was, it is difficult, I think, if you really are being treated well and everything, you've done everything that you can. You created a great culture as a leader of a company. You've treated your employees well. You've done all this sort of stuff, and they're not leaving because of burnout, or they just have different career aspirations. Is the guilt even warranted? I mean, as a firm leader, is there anything you do where you just are kind of like, you know what, I'm happy with you on your journey?
So, I mean, I don't know if they are treating this person well. Can we dig into the comments on this one?
So I don't want to forget, though.
Because I get, they can be nice and provide work-life balance and everything, but we look at that compensation and I would argue maybe they're not treating them.
Sure. Maybe
that well.
It's fake then.
That's so, yeah.
You want to read some of these from this next
Yeah, and this is very fair. So someone says, what is this? Hang Overture, 7 years at the same firm and you're only making $82,000. That's laughable up here in Canada, let alone in California. With that experience, my man is like 100% under market, absolutely brutal. Also, ain't no such thing as local cost of living in California. Yes, for sure. There is a wide range of cost of living around here. 82K with 11 years of experience. No wonder they love you so much. Get out there and get paid what you're worth. The next comment from Gonuck. All right. They will start looking for your replacement before you've even packed up your desk. And then a fellow comment, but they will start,
They'll start them,
but they'll be starting them at 100K. LOL. That is probably spot on. So yeah, this is why people job hop so much, right? To get raises. So if you're the type of person who's scared about job hopping, which my guess is this person fears change and is a little concerned to do it and doesn't want to go through the interview process and go to a new company and get to know people and go through all that kind of stuff and take on the risk of, are these people not going to be as nice? So I get that, but they're woefully underpaid at 82 grand with 11 years of experience. And this kind of stuff, in my opinion, is part of why accountants are undercompensated. This person should be going out there and getting what they're worth. And somebody said they're 100% under market. I agree. I think this is at least double the cost, depending on where you live in California, if not more than that, for that amount of experience. So yeah, get out of that job. If they're really nice to you, maybe you just go to them and say, hey, I feel unfairly compensated. Here's what I'd like. Would love to stick around if we can make that happen. If not, I'm going to go look for a new role, and I'll give you three weeks notice on that. I guarantee you're going to be able to find a job. Go do that, and that's the right approach to the situation.
My red flag about this original poster is that they don't mention at all about how their aspiration is to go make more money, and it makes me wonder their own competency of the self-awareness of their worth. If you have 10 years of experience and you're sitting at 82,000 at this accounting firm,
they don't know their worth.
Yeah.
I mean, even being like the pay is pretty good in all of them, 100K base. No, stop. You can go make more than that. I can tell you people with less experience than that are making more money.
It seems accountants just typically allow themselves too often to get taken advantage of.
I go back to, I think the risk aversion is a very real thing that keeps you back from from job hopping. And this is part of why at FloQast, we really strive to pay for fair market value. It's not just like a percentage raise, but it's like, hey, if we went to try to replace you in the market today, what would that cost? And that's the fair compensation. So we think about it a little differently than most companies, where it feels like most companies are just like, what's the minimum percentage every year? How long can we milk this? And then they're going to be underpaid, and hopefully they don't find out for too long, and we can, milk someone like this who doesn't realize that they're probably worth twice as much as what they are. So yeah, go to industry. But if you really do like the firm, go to them and have a just business conversation. Be like, hey, I love working here. Been here for a really long time. I think you treat me well, with the exception of my compensation. And so if you're willing to come up to 120, 140 or something, I'd love to stick around. If not, I'm gonna go see if there are any roles in industry that pay me a little bit better.
And the other part of beyond just the conversation.
And sorry to cut you off, but like as a CEO, I'd much rather have that conversation than have somebody come to me and be like, I took another job and the only reason is because they paid me more, but I loved it here and I'm sorry about that. It's like, could we just have this conversation up front? And if as long as you're reasonable, like we're going to be reasonable also. So a lot of times, like people are scared to talk to their boss about this kind of stuff. I can tell you from personal experience, I gave my boss at EY a ton of heads up. I was just like, hey, I'm going to be leaving. I'm interviewing. I don't even know when I'm going to be leaving, but I thought it should be on your radar because I don't want to blindside you out of nowhere. And she appreciated that so much. It wasn't like, you're fired, get out of here. Right. It was just like, thank you so much for that. I wish you the best of luck. I'll do reference calls for you, that kind of stuff. And it was beautiful. So transparency, I would definitely err on the side of transparency with this one.
And the other side of what he's looking for is this career growth, the aspirations to do more. And again, starts with the conversation. Again, whether beyond just the compensation, right? If there is the desire to do some other growth or activities, and I think this comes again with the accountants not always speaking up for themselves, you can have that conversation as well. Like, well, how do you see yourself adding value in a different way, or what area would you like to explore? And perhaps there's a way to fit that in. I mean, a lot of my career has been built off of proposing different levels. When I was at Grant Thornton, I was like, I really want to work some more in the business development and marketing side of things. I think I have some good insight. I'll still do my client work, but if we just reduce the utilization requirements there, I think I can assist in this area. And they're like, yeah. So I just proposed it, put it together in a pitch. And they're like, yeah, sure. We'll let you do a little rotation with them. You stick with the clients that you have year over year. But instead of just having you flown around during your 2-week unassigned times between engagements, you just get thrown on a client. You can utilize that to go help run the events and mingle at the office, and we have the events and stuff like that. So
companies are a lot more reasonable than I think people realize, and it's like a lot of, especially more junior employees, they view a company as this like evil monolith that is just gonna like fire you if you ask for something like that. But as you can tell, like if you present a good idea, know your audience, know the person you're speaking to about it. Is this human being somebody who's going to be open to this? Like certainly know that. And if they are, make the pitch. What's the worst thing they could do? Say no?
Yeah.
Who cares? You're back to square one.
Right.
Worth
at least you know now.
Worth an ask. Yeah, totally.
And I think what's really good that you brought up is valuing things at fair market value, because you don't want to create, by the time like the resentment forms, because when people are just like, oh, we'll give you the crumbs, that's just enough. The resentment starts forming and there's no really clawing that back. Once it starts, it just erodes and it erodes and erodes, and then there's really no saving it. So you got to get ahead of that.
This one's a little unique because it seems like the person did not realize they were underpaid until they went for the first interview. So there might be like an acute thing where they clearly don't have resentment because they like the place. Right. So I would hope just a frank business conversation could get this solved. Yeah. I do have a hard time reconciling the lack of professional growth, but also not wanting to be a partner.
Yeah.
What do you want? What do you want with your life?
I want to grow, but I don't want to be partner. I was like, well, that's the next step here. So, fine.
But hey, this is a good post for Reddit, and they got some really good, spot on feedback. And go get yours and help the accounting industry at large get compensated. These are the types of moves that have to be made.
So some things that are concerning, and this is definitely very concerning, more concerning than that guy's career trajectory. This is from the Wall Street Journal, the U.S. population by age and gender in 2020. And we see a nice big chunk up here of baby boomers.
You went macro on this. You went real macro for your concerns this week.
Yeah. I mean, this is what's going on in the news. I'm just trying to bring the buzz.
Yeah.
And American labor shortages are turning into a long-term crisis. And we kind of have known about this. We're not replenishing ourselves at the same rate. If two people come together and have one child, that's a half a replacement. You've replaced half of a person. So you have not replaced yourself. In order to replace yourself, you need to have 2 kids, because it takes 2 to tango. And the interesting thing here about the chart for those at home who are just listening and maybe not able to see it, this chart shows the different ages by male and female of different populations. And you can see the baby boomer section being a lot larger than the under 20 section. So the individuals who are in this demographic far outweigh the children population of the same span of years.
So yes, this stuff is all very concerning. And then if you play it out in the future, I believe the replacement rate is about 2.2 kids per couple.
Is that built-in churn?
Unfortunately, yeah. It's kind of sad. Today, or as of 2020, I'm looking at it, and we're at 1.6 in the United States.
Declining population.
Now, it's been declining for a while. We've actually been under the 2 mark, believe it or not, since the 70s. So that was kind of the starting point for this beginning of the population collapse. How do you think the gap has been plugged historically since the 70s?
Immigrants?
Correct. What are we doing?
Reducing immigrants?
Trying to as a country. So that's an interesting factor where maybe that's one of the saving graces for this pyramid that we have here, but we're not exactly very supportive of it. So I find it fascinating where we are as a society and the birth rates and everything, right, and where we're aging. And clearly, like, it's going to be very difficult for fewer people who have less wealth accumulated to support an aging generation. You went super macro with this. Have you seen this chart for other countries?
No, I haven't actually.
Oh my gosh. It's you look at other countries and you feel so good about this.
Are they worse?
You're like, I feel great. Gosh, I wish I could fire it up for this. Like, Japan and China are 2 of the starkest ones because China had the one-child policy.
Right.
And that just cut up real quick. And Japan's been having a lowering birth rate for a really long period of time. So they have this at the extreme end of it as well. So yeah, you look at other countries like, actually, don't feel so bad about this one. We're doing okay relative to others.
I'm curious about the immigration to other countries too. So like, I imagine many people aren't immigrating to China. They also have such a massive population to begin with.
Yes.
And a oddly productive economy. But again, that's the nice balance of these capitalism safe havens within a communist.
Are you able to pull stuff up on the screen in real time? Yeah, it's if you go to Wikipedia, look at the China population, you'll see the chart. It's just like puts it in perspective where we're at versus other countries have had more, have had different measures. It's wild.
Yeah,
it's wild.
So the other stuff that they're worried about in the short term is investors worried about $100 a barrel. Oil might derail the Fed's soft landing. Surging Treasury yields. I thought this one was the most interesting. Treasury yields are punishing tech stocks. The yield on the benchmark 10-year Treasury settled at the highest level since 2007 last week.
I'm very concerned about this.
So
I'm not an economist, however.
Being in the tech stock realm, can you explain that whole treasury yield thing and how that impacts tech stocks?
That's kind of like old news to me. It's as soon as the interest rates started going up, it started pummeling growth stocks. So what happens is, as an investor, you're looking at, what's the expected rate of return over some period of time. And with growth stocks rely on the ability to raise money. People have extra money. They put in a stock that they believe is going to grow in the future. They're willing to place that bet rather than invest in other things that are lower risk and can pay out immediately. So things that pay out immediately would be if you invested in a company that pays a dividend stream, maybe not as growing as quickly, but pays a dividend, you can get that, or U.S. Treasuries, bonds, whatever, that's paying a higher interest rate. So if you're able to now get 5% with zero risk, why not sit that in an account? It all compounds, right? Or do you want to take the risk on investing in a growth stock that might fail at some point, might go up, might not be able to raise money? It's, just as an investor, you're doing a spreadsheet analysis. What's the discounted cash flow and the risk associated with this? And it makes all the sense in the world to move away from tech and more into the dividend paying and treasuries lower risk. So this has been happening, but people react to that based on news. And that's been happening in tech for like 18 months, man. We've taken our pummeling already. This is not news to me. But it does mean that with the rates staying where they are, it's going to continue for longer, right? So it's going to be harder for companies to raise money. You're not going to see as many startups. IPOs are going to be more challenging. We just had a couple IPOs, and Klaviyo, congratulations to Klaviyo. They had a killer IPO. They are an amazing company. Like, shout out to that executive team. They're doing great things over there. And it was still a modest multiple. And why is that? Because there's not as much cash sitting out there willing to pull it away from a guaranteed return and put it into a growth stock. When you look at a world of growth stocks where some of them are down like 90% from the peak highs, right? So that's the calculus that's going on with them.
It's got to be probably a little bit boring to be one of those individuals working at the investment firms or I don't know if it applies to venture capitalists and private equity the same way, but like your job's go find these potential cash cows, these low early on businesses and startups, and there's something exciting about that. Now your job's pretty easy. It's like, yeah, let's just throw it in the treasury. Let's just throw it in the bank.
Yeah, that's what, like within the venture world, it's so different what stage you work at. And you notice that even like the personality types change. Yeah, the type of work clearly changes. Early on, no one wants to look at a spreadsheet. They don't care about what any sort of spreadsheets. It's about how good's the deck, what's the idea, how much arm waving can you do, and how much can you get people excited. Now at our stage, it's like, yeah, are you sure that formula is right? And the numbers change over here, and how'd you calculate that metric? Is that in line with, public company guidance and all this kind of stuff? And yeah, it becomes a really different dynamic as you go. And that applies to the associates and the types of people who are hired at that firm. So, you have a lot more spreadsheet jockeys at the later stage funds, none of them at the earlier stage.
Kick the can strategy is like, well, when there's actually like a substantial amount of money on the table and there's like serious growth or whatever, we'll deal with the getting compliant then. I mean, think about it. You're not spending the early hours of your startup company working out all the kinks of your org structure and how you're going to stay compliant. You're just like, how can we get some sales? How can we get some hype? How can we get investors?
I'm going to disagree for a second. Okay. We had to get compliant very early to sell what we do.
Given the product.
Dude, we were SOC compliant with 9 employees or something like that. It was really, but fortunately we come from the accounting background. That's helps. Not an insanely daunting exercise. I mean, it wasn't fun for sure. You got to add controls and it changes things, but like we needed it to sell. We were compliant. I mean, we're not SOX compliant. I'm not doing that stuff until we go public. Like we're not going to do any of that, but any of the compliance required to sell, I just want to make sure the audience knows. Yeah. We have all of that. We take it very seriously. We've been like that for a long time
that's
here.
Good to hear.
Well, yeah, not every company is founded by accountants. Not everyone sells products that need that level of compliance. So not everyone's like that.
For sure. So speaking of things that firms are doing, firms aren't doing so bad according to them. Almost half are outsourcing work. This is from Going Concern. And I have some interesting stats here from this. More than 50% of firms reported double-digit organic growth rates. Average non-compliance revenue as a percentage of total net revenue was 43% for firms above 50 million. Non-compliance revenue as a percentage of total net revenue was 43%. Average net income growth was 14.4% for firms above 75 million. Outsourcing initiatives were reported by 47% of firms, and professional staff turnover was 14.4%. Outsourcing has been going on for a long time. I'm kind of curious what people think about what's more valuable, outsourced or AI, and what the push will be and what the rub will be there. Because before there was AI, it was how do we get this work done cheaper? I've always had like curious opinions on the concept of outsourcing work, and it's not a matter of like, do I trust somebody else outside the country doing it? It's just like these people are being paid like, pennies to do work that is being billed exorbitant rates here in America.
The other challenge with outsourcing, and this is more a comment on like engineering, is when you have people who don't work for your company, they don't care about the long-term success of your company. They care about getting done what was due today. And that doesn't necessarily mean it's done in like the most intelligent, critical thinking way with a long-term thought in mind. And so yeah, when you just have someone who's outsourced, they just don't care about your business as much. It's about getting through the day, getting it done, and moving on from there. I would guess. So we work with we have a few accounting firms who use FloQast to manage their clients and do the outsourced accounting work. And I think probably one of the reasons they're becoming popular is because they're really, I think the fixed billing structure is more appealing. So back to having I know what this is going to cost, and people are willing to bite the bullet and understand the value of it a little bit more. So these firms can charge and have a really predictable business model because of that. And then they're building tech practices underneath all this to support their people and make them more efficient. So if you switch to recurring billing where you know what's up, and then you're driving productivity as much as possible through technology and like unified tech stacks that they can roll out across the whole firm. That's how you drive profitability, right? That's going to do a really good job driving profitability. And people are happier because they're working less, so your turnover is going to be lower. It's like kind of a win-win.
Right. I mean, you have to address again, this is all back to the pipeline issue, and they need to have more people getting the work done. I always get concerned about the quality and the consistency because everybody across I've looked at review papers before from the Australia entity, did the audit of the Australian sector of the business, and it comes in and I'm like, they have a different way of formatting their worksheets. And it's kind of like learning a different language in a sense.
Well, that's it. So like when I speak with the tech leaders of these firms, that's actually what they're driving for, is as they want all their clients to be as consistent as possible. So like with us, they have a standardized checklist that they roll out. It's like, here's how we close the books for our clients. With that, they believe like team members can be swappable. Just, go look at what we did last month in FloQast, do the same thing, roll that forward. Here are all the reconciliations. Here's what they should look like. Keep carrying those forward. And so they're trying to add all of that. And then back to your AI question, all these firms are going to embed AI and use the tools that become available to them, which will further drive productivity and all that stuff. And you would hope with all that comes better accuracy, better documentation, everything. So hopefully they're fixing some of the complaints that you have about outsourcing, which I agree with kind of those historical changes, but I see it changing and it's reflected in the numbers here.
Yeah. Among firms with over 10 million in revenue, more than 50% are engaging in outsourcing activity. Close to 70% plan to do more outsourcing next year. Of those CPA firms not currently outsourcing, 50% intend to do so next year. So it's just become the standard. It's become the norm. And as everything goes, America kind of just creates this thing, and because it's like, well, do they not have work to do over there? And it's like, no, we just have the big companies that we can start to pull these outsourced entities into. And
I think it's important to note, though, that the size of business using them is generally like small businesses, where the other option is, can I afford a full-time accountant? I don't know. So if you're looking at the cost of one full-time accountant versus maybe $1,500 a month for like a firm who knows what they're doing to do all my accounting, the math starts to make a lot of sense, which is then good because we have this talent crunch anyway. So we can solve that issue. But like our clients, for the most part, medium enterprise, larger companies, they're not like using a lot of these.
There's also a real appeal to the 24-hour work cycle, where it's just as soon as you're going to bed, they're waking up and picking right back up.
I do like that a lot.
Kind of cool.
I love that part of it.
So favorite section here, how should we account for memes? And this was fascinating because last episode we were talking about where's all the accounting memes, and I don't know, maybe he heard us, but the Big Four accounnt came back firing hot. I mean, he had a whole bunch this week. This is one in particular which I just thought was absolutely hilarious. So he must have heard. He had another. So this one is from the Big Four accountant, and it's trying to plug the variance. And this was actually a GIF. And so rather than playing it, I just took screenshots of the different moments. So you have this doctor here, and you have three bears sitting on the table, and the doctor's doing the reflex test. So he taps the income statement bear's right leg, and his left leg comes up. Okay. Go over to the balance sheet bear, tap his right knee, his left arm goes up. Go over to the cash flow bear, tap his left knee, both the right legs of the income statement and the balance sheet pop up. And this is trying to plug the variance. And I feel like it's so relatable to every account that's trying to fix something. And they're like, I'm just trying to plug this to get it to balance out. And as soon as you fix that one on another workbook or on another page of your workbook, a different sheet, something's now off. And you're like, oh, damn it, that's linked formulas and it's taking you somewhere else.
And I already did the reconciliation and tied it out to my ERP. And only if I'm using FloQast will I know that any of that changed to be alerted to it. There's your FloQast plug for the day. When you're trying to plug variances, we'll provide you the confidence
That's amazing.
that it's not messing up other balance sheet accounts.
That's a layup.
I love it.
Let's give this clip to marketing.
Too easy, yeah.
Other one was 78% of accounts are bad at math. I'm glad to be part of the other 32%.
That's awesome.
So yeah, I mean, good to have you back, Big Four account. We missed it, and this was one that had some good laughs. But I just kept laughing. I just kept watching this thing on loop, and you just see the bear arm go up, the other arm go up, the other two arm goes up, and I'm like, so frustrating. This other one here is from Litquidity, one of my favorite names for an account. And this is finance academics when you tell them you can value a company by simply slapping on an EBITDA multiple and calling it a day. And this is Kevin James. No, you need to run a DCF, discounted cash flow. It's not that simple. You are dealing with sophisticated buyers. Businesses are more complex than that.
I tend to agree with all the sorts coming out.
Yeah. Valuation is one of those lanes that like I've currently become kind of obsessed with. There's so many factors, so many variables, and I think it's the most gray area of accounting.
Yeah.
And it's also kind of cool because like accounts can add a lot of value because when you've seen at the end of the day, if you're doing valuation, it just comes down to like how much have you experienced of similar valuations. The number one go-to, of course, we talked about in the last episode, level 1, 2, and 3 investments. And the level 3 ones are totally ambiguous. How are you valuing what this thing is at? And obviously what you try to do is figure out the closest, most recent resemblance of whatever that transaction is or whatever that asset is and how much was that valued at. And that's the only thing you have as like a basis to go off of. And the more experience you have with different clients and how much different things are worth, I know how much value different job roles are because when I was auditing payroll and I'm pulling all those different job functions from HR and say, oh, okay, that's how much they make in that job. Interesting. And I go to a different company. I'm like, oh, at that company, that same role makes something different. Okay.
That auditor from our Reddit thread must have never audited payroll.
Yeah. Well, I guess you were tax. I think they were in tax. That's why.
There we go. All right. There we go. And also, what's the use case here? I mean, it's like for valuing publicly traded companies, or are we just looking at businesses in general? Because EBITDA, it's helpful, but you got to look at EBITDA in the context of the industry that you're in. Like EBITDA for a software company is way different than EBITDA for a manufacturing company that's paying dividends. Like it's just, they're different things that matter. And perhaps I'm just saying that from a self-serving nation because our EBITDA sucks as a growth tech company. But yeah, people look at tech companies different because we have the ability to get to $1 billion of recurring revenue, the predictability and cash flow that comes along with that on the back end of hitting that scale is very appealing. And so you get a different multiple and different valuations on different areas. Like EBITDA is not what we're valued on.
Well, I would love to just see how your brain has changed over the course of 4 different series of fundings and how investors are looking of how are we going to value how much your company's worth? Because it starts off with, I'm valuing you and an idea.
Yeah.
So then from there, you start to have other factors.
What's interesting is along the way, a lot of the metrics don't change. It's just the bar goes up. And then when you get later stage, now you start talking about EBITDA, this kind of stuff. So this is actually the world we're now starting to forecast out like, okay, 2024, 25, 26, what is EBITDA going to look like? We care about that. There's another rule in SaaS called the rule of 40, which is growth rate versus operating loss, and you want that to add up to a rule of 40. But what a lot of investors look at is one of the most important metrics is net revenue retention, and how much more are your clients paying you this year than they were last year. You want that number to definitely be above 100%, more like 120 is what you want to really be in. And then how efficiently can you acquire a customer? So what does it cost you to go out there and acquire a customer? And does it cost you less to acquire them than what they're going to pay you in the first and second year? If you're below that threshold, you're good to go and you're growing effectively and you'll be all set. So it's different. It's mostly around what are called unit economics and growth efficiency, because everyone believes on the back end, once you achieve scale, then the cash flow that gets thrown off is something else. Like, dude, to give you context of how this can all play out, Workday's at about $6 billion of recurring revenue now. And you hit some point at which you don't need more humans to support that amount of revenue. So they're throwing off, I believe, $2 billion a year in free cash flow.
Wow.
So that's like what can be dreamed with these SaaS companies. And that's why people are willing to pay big multiples at 100 million ARR. Because if you believe they can get to 1, 2, 3, 4, 5 billion, the cash flow gets wild off the back end.
Early on, how much leverage do you have as the company? Because you're still trying to like prove yourself. You need the funds. It's almost like being on Shark Tank, and if you could be bluffing, right? And it's just like, I really need this money, but I'm playing hardball where I'm like, oh, for $500,000, I'll give you 20% of my company. It's like, where are they coming up? I'm always curious as to like what happens off camera as far as sharing of any financial data and information like that. It would be easy if you could just look at like, this is our sales and we just multiply that by 5 and this is what we're worth or something. But
yeah, the markets are very different. So I'm hyper transparent through the whole fundraising cycle. So as soon as I meet with an investor, they know our scale, they have a sense of our unit economics, and I would rather disqualify someone early rather than waste my time spending cycles with them to where we're just not going to be the type of company they want to work with. So and then it all depends on what is the demand for your round. So it's really, if there's only one investor who wants to invest in you, you have a different situation than if you have 2, 3, 4, 5, 6. So we ended up not taking the highest price we were offered because of the person we got to work with. So George Bischoff at Meritech, the fund, shout out, like he's been amazing to work with. He got a lower price because of his reputation, how awesome he is to work with, how great of a firm there is out there. And so at the end of the day, it's not only to the highest bidder. It's like, it's my job to think holistically about the business. And I believed that George and Meritech would put us in the best position to ultimately be worth the most. So I was willing to give away a little bit of dilution at that point because he most aligned with our long-term goals.
Because it's not just here's some money, go do stuff with it. It's the involvement and the aligning with the partner that's going to be beneficial to the long-term strategy.
And this is wild. I don't know if he'd want me saying this or not, but like Chris went out to dinner with us, kind of the last dinner where we were deciding what to do and how to close the deal. And I headed into the dinner like talking to Chris, and I go, so there's about a 15% gap in the valuation here. Like I'm okay taking less, but I would like them to close the gap a little bit. He's like, okay, well, and I'm like, yeah, I'm gonna get it at dinner. And we get dinner, we get to the end, and it's kind of like, yeah, we would love to work with you guys. The one concern I have is it's hard for me to go to the board when there's a delta in the valuation like this. Like I want to work with you guys, but I need to close the gap a little bit. So would you be willing to do it at this price? And I asked nicely for a higher price. They immediately said yes, and we had the term sheet the next day, and that was it. And Chris was like, all you did was ask nicely? I'm like, yeah, that's it. And it's fair because I just had to peg against the fair market. I'm not being greedy. I'm not like, you have to beat this round or I'm not going to work with you. It's like, dude, I want to work with you. I'm not going to bluff about that, but I do think we need to be fair here, and the market's stating a higher price. So
sometimes it's just easier to just be transparent the whole time from the beginning, because then when you do have that ask, then it's not like this weird situation of, are they bluffing? Are they serious? Is this a game? It's like, look, this is just where I stand.
It's always easier. And not only that, it starts the relationship off on the right foot because you're about to work together for a very long period of time. Like, could you imagine if I was just a jerk during that process and was like, no, you got to get to this and this, and I only want to work with you if you get the price. It has nothing to do with you as a human. It only has to do with the valuation you give me. Like, what a horrible way to start a relationship. And so, yeah, I've as you know, I err on the side of transparency, be honest, just to get all your chips out on the table, whatever. And it's the best way to do business.
Ethics, honesty, reliability, that is what accounting is.
It's so much easier.
About.
Then you don't have to keep stories straight.
And that's the benefit of being in the accounting profession. Yep. Yeah, and the final thing I wanted to touch on when it comes to this valuation aspect is it is interesting depending on, because accountants can provide a lot of value when it comes to valuation and just having the information, being ethical, being honest, transparent, stuff like that, knowing the meaning behind the numbers and how things sort of work. But it's interesting if you're the buy side accountant or the sell side accountant, because the whole goal is to try to get the numbers to be favorable for you. If it's like, okay, well, we're interested in acquiring you or investing in you, we're going to send our accountants in to go, just dig around a little bit and just, is that cool with you? And it's like their own audit, and due diligence, which makes sense. And they're looking in like, where can I find some value to be like, oh, there's a ding, we're going to ding them on that, we'll ding them on that. Versus the other side, if you're like looking to go propose, hey, we're looking to sell or we're looking to raise, we put together this report, your accountants go in and like, all right, how can we beef up in every area possible?
Yeah. I did that.
Creative accounting.
We did a acquisition of my last company, and that was my exact job, was how could we chip away at the purchase price for this one? And there is a twisted pleasure in putting your audit hat on and being able to figure out all the kind of nonsense that's moving through the financials. And if there's stuff that rightfully is inflating things, like pull that out. It should be considered part of the purchase price, and that's part of the process. Yeah.
I never thought in my life I'd come back to a point where I like love and appreciate auditing as much as I do. And I think it just comes down to having the experience in industry in a few different sectors, especially like I love working in a startup tech company environment and seeing how that works from that standpoint too. Being in a place where a lot of people are creating their own brands. I mean, everybody out here they've got their own app they've created, their own clothing brand, their own designer thing. And it's really cool to now come from the financial perspective. And the thing that I swore back in 2016, I was like, I will not be sitting in this audit room 1 year from now. I made that promise to myself, and I wasn't, which is amazing. Mm-hmm. Now it's something just you can appreciate so much more having the experience.
Yeah, it's hard in the moment, but reflecting, you appreciate the kind of high level thinking that it gives you. And so, taking time might not feel great every day, but that you're gonna have a better approach and understanding of life in general, I think.
Which is why I think we said from the whole pipeline thing, have people get some work experience in maybe as part of that requirement instead of the get your MBA, go get your business experience and come back in and you'll have that.
Yeah, I would love that. That's a big, with AI, never mind. We'll talk about it. We'll save that for a different conversation.
But really exciting way to uplift accounting, I think, there at the end. And this has been a fun episode, a lot of great insights. And
Dude, whenever you have two good regulatory pieces of data coming down the pike, I would say that's a good day for accounting. We elevated accounting. These are smart moves, in my opinion, being made by the PCAOB and the AICPA. Shout out.
Be pumped, everybody. We did it. All right. Hopefully everybody has a great end of quarter, and by the time you're listening to this, month-end close, quarter close as well.
It will be month-end close, so Godspeed. I hope it goes smoothly for you.
Good luck in Q4.
Thanks for checking out the FinTech Flo. As a reminder, this episode is available for CPE credit, and you can get that at FloCademy or on the Earmark app. Details are in the description below.